It's 2 a.m. You're staring at your screen. Your account is down 43%, not for the month, for the day. You knew the stop loss. You set it at 2%, then it hit. And you thought, just a little more room, it'll bounce. So you moved it, then moved it again. And now you're here watching years of gains evaporate in hours, thinking the same thing you always think. Why do I keep doing this? Let me tell you something that nobody wants to admit. You're not stupid. You're not undisciplined. You're not even unlucky. You're human. And human brains are fundamentally incompatible with profitable trading. I don't mean that as motivation. I mean that as biology. See, your ancestors survived because of certain mental shortcuts. When they saw a tiger, they didn't think, let me analyze this situation rationally. They ran. Fast decisions, emotional decisions, life or death decisions. That wiring saved the species, but it's destroying your trading account. Because when you see red on your screen, your amygdala doesn't know it's just numbers. It thinks you're being attacked. Your body floods with cortisol. Heart rate spikes. Rational thinking shuts down. You're literally in the same state as someone running from a predator. And in that state, you make the same mistake you've made 100 times before. But here's what makes it worse. Sometimes that mistake works. You remember the time you held through a brutal drawdown and it reversed. You remember revenge trading your way back to break-even. Your brain encoded those moments as survival victories. It doesn't care that you lost the next 10 times. It remembers the wins. That's called intermittent reinforcement, and it's the same mechanism that makes slot machines addictive. Let me break down exactly what's happening in your head during a typical trading disaster. You enter a trade, you've done your analysis, you're confident. Your brain releases a little dopamine in anticipation. Feels good, right? That's not confidence. That's chemical dependency starting. The trade goes against you. 5% down. Your strategy says exit, but exiting means admitting you were wrong. And your ego, that beautiful survival mechanism that kept your ancestors alive, can't handle being wrong. So it whispers, you're smarter than this. The market will see. You hold. 8% down. Now panic sets in. The cortisol hits. You're not thinking about your strategy anymore. You're thinking about how you'll explain this loss. To your spouse. To yourself. The pain of losing is psychologically twice as intense as the pleasure of winning. That's loss aversion, and it's why you do crazy things to avoid realizing a loss. So you average down. I'm getting a better price, you tell yourself. You're not. You're doubling your bet on a hand you're already losing. 12% down. The position is now so big that closing it would hurt. Really hurt. So you tell yourself a story. It's just a dip. Institutions are shaking out weak hands. I'm strong money. You're not strong, you're stuck. There's a difference. 15% down. You're moving your stop loss. Again, just a little more room. The stop loss isn't protecting you anymore. It's following you down like a loyal dog into disaster. 25% down. Now you're in full degeneration mode. You open another position to make back the loss faster. Different pair. No analysis, just urgency. That's revenge trading. You're not trading the market anymore. You're fighting your emotions. And your emotions have infinite capital. Then one of two things happens. Option 1, it reverses. Against all odds, the trade comes back. You exit at break-even or a small profit. Your brain explodes with dopamine. You just escaped death. You're a genius, a warrior. This moment gets encoded in your memory as proof that holding and hopping works. You just reinforce the worst possible behavior pattern. Next time will be worse because now you have evidence that your recklessness pays off. Option 2, it doesn't reverse. You take a catastrophic loss, your account is decimated. You feel sick, genuinely physically sick. You swear you'll never do this again. You might even close your trading platform for a few days. But here's the thing about rock bottom. It has a basement. And you'll find it because the pattern isn't broken. You just paused it. Now let me tell you what happens in the days after a big loss. You can't stop thinking about it. That's your brain trying to process the trauma. You replay every decision. If only I had closed at 5%. If only I hadn't averaged down. If only. But this rumination doesn't teach you anything useful. It just deepens the emotional wound. Then comes the dangerous phase, recovery mode. You're down big, You need to make it back, so you start taking trades you normally wouldn't. Riskier setups, bigger positions. You're not following your strategy, you're following your desperation. And desperation is expensive. Some traders go the opposite direction. They become paralyzed. Every trade feels like it could be the next disaster, so they hesitate. They exit winners too early. They skip good setups. Now fear is costing them money instead of greed. Different emotion, same result. Here's what nobody tells you about trading psychology. Knowing what you're doing wrong doesn't fix it. You've read the books. You know about loss aversion and recency bias and confirmation bias and all the cognitive traps. You could teach a class on trading psychology. But when you're in the trade, when the cortisol hits, when your amygdala takes over, all that knowledge becomes background noise. Because you're not operating from your prefrontal cortex anymore. You're operating from your lizard brain. And your lizard brain doesn't care about your trading plan. So what's the actual solution? First, let me tell you what doesn't work. Discipline, willpower. This time will be different affirmations, vision boards, motivational videos, all useless. Because you're trying to use conscious effort to override subconscious programming. That works for about 20 minutes. Then biology wins. The only thing that works is systems. Not better decision-making. Better systems that remove decisions. Let me give you the framework that actually works. Rule 1. Automate your risk management before you enter the trade. Not after, before. You set your stop loss and take profit levels before you click buy. Then you set them in the platform, hard stops, not mental stops. And here's the critical part, you make them unreachable. Some platforms let you lock orders, use it. Some traders have a friend change their platform password after they set stops. Extreme? Maybe. Effective? Absolutely. Because you can't move what you can't access. But what if the stop is too tight? What if it's bad timing? Doesn't matter. The stop is the stop. You're not smarter than your system. Every time you think you are, you're about to prove you're not. Rule 2. Trade size small enough that you don't care. Here's a test. If you can't watch your position go to zero without emotional reaction, it's too big. I'm serious. If you're checking your phone every 5 minutes, if you're calculating how the P and L affects your bills, if you're feeling euphoria or dread, your position is too large. But I won't make any money with small positions. You're not making money with large positions either. You're creating volatility in your equity curve. Small positions let you follow your rules. Rules followed consistently compound. Rules broken sporadically explode. Most traders have this backwards. They think bigger positions mean bigger profits, but bigger positions mean bigger emotions. And bigger emotions mean worse decisions. And worse decisions mean losses that wipe out months of gains. Trade small until you're bored, then trade smaller. Rule 3. Journal your emotional state, not just your trades. Most trading journals are useless. Bought EUR/USD at 1.085, stopped at 1.083, reason, support level. Who cares? That's not why you lost money. Your journal should answer these questions. How did I feel before I entered this trade? What was I trying to prove? Did I follow my rules completely? If not, what emotion made me deviate? What was happening in my life today? You'll start seeing patterns. Every time I trade after a fight with my spouse, I lose. Every time I skip my morning routine, I overtrade. Every time I'm on social media before trading, I take impulse entries. These patterns are your actual edge, not some indicator, not some strategy. Your edge is knowing when you're about to sabotage yourself and walking away. Rule 4. Implement mandatory breaks after losses. Here's a hard rule. After any loss, close your platform for 24 hours, not 20 minutes, not I feel better now, 24 hours. But I'll miss opportunities. No, you'll miss revenge trades. The market will be here tomorrow. Your account might not be if you keep trading angry. And after a really bad loss, 1 week minimum, no charts, no financial news, no trading Discord servers, complete detox. Let your nervous system reset. Let the cortisol clear. Let your rational brain come back online. This feels impossible to most traders. That's how you know you need it. If the idea of not trading for a week makes you anxious, you're not trading for profit anymore. You're trading for stimulation. and stimulation is expensive. Rule 5. Remove the audience. Stop posting your trades on social media. Stop bragging about wins in Discord. Stop trying to prove you're a good trader to anyone. Every time you make your trading public, you add ego to the equation. Now you're not just trading to make money. You're trading to look good. And those two goals conflict constantly. When you post a winner, you get validation, dopamine hit. Now you're chasing that feeling, not profits. When you post a loser, you feel shame. Now you're trading to recover your reputation, not follow your strategy. Trade in private, win in private, lose in private. Your only audience should be your journal. Rule 6. Separate analysis from execution. Never analyze and trade at the same time. Never. Do your analysis before the market opens. Write down your potential trades. Define your entries, stops, targets. Then close the charts. When the market opens, you're not analyzing anymore. You're executing. If your setup triggers, you take it exactly as written. If it doesn't trigger, you do nothing. No improvising. No, I see something interesting. You're a robot executing pre-made decisions. This separation is critical because it keeps your emotional brain away from your trading brain. When you analyze during market hours, you're constantly reacting to price movement. Every candle creates an emotional response. Every dip feels like opportunity. Every spike feels like FOMO. You're not thinking clearly, you're reacting. But when you analyze offline, you're calm, rational, patient. That's the version of you that should make decisions, not the panicked version watching red candles pile up. Rule 7. Define success as process, not profit. This is the hardest shift to make. Stop measuring your success by how much you made today. Start measuring it by whether you followed your rules. Did you wait for your setup? Success. Did you take profit at your target? Success. Did you stop at your daily loss limit? Success. These are wins, even if you lost money. Because here's the truth. You can't control whether a trade is profitable. You can only control whether you follow your process. And if you follow a good process consistently, profit is the inevitable byproduct. But most traders have it backwards. They'll break every rule to make money today, then wonder why they're broke next month. They're optimizing for the wrong thing. Your goal isn't profit. Your goal is robotic consistency. Profit follows consistency, but consistency never follows profit chasing. Now let me tell you about the trader's biggest enemy, boredom. Good trading is boring, really boring. You wait for your setup, you enter, you wait, you exit. Most of your time is spent doing nothing, and your brain hates nothing. Your brain wants stimulation, action, drama. That's why you start taking marginal setups. That's why you trade during lunch when you said you wouldn't. That's why you open positions just to have something to watch. Boredom feels like you're missing out, like you're not really trading. But boredom is the signal that you're doing it right. If trading feels exciting, you're gambling. If it feels boring, you're probably following your rules. The best traders I know describe their process as tedious. They're not battling emotions. They're battling boredom. And they win that battle by having other things in their life. Hobbies, relationships, purpose outside of trading. If trading is your only source of meaning, you'll sabotage it to make it more interesting. Guaranteed. Let's talk about something nobody wants to hear. Most traders need to quit. Not because they're dumb. Not because they're unlucky. Because their personality is fundamentally incompatible with profitable trading. If you're someone who needs constant validation, trading will destroy you. If you're someone who can't handle uncertainty, trading will destroy you. If you're someone who needs to be right more than you need to be profitable, trading will destroy you. And that's okay. Trading isn't a moral virtue, it's just a skill. Some people aren't built for it. That doesn't make them failures, it makes them self-aware. But if you are going to trade, you need to accept some hard truths. Truth 1, you'll be wrong most of the time. Even great traders win maybe 40 to 50% of their trades. You need to be okay with being wrong more than you're right. If you can't handle that psychologically, trading will be torture. Truth 2, your best trading days will feel terrible. The days you make the most money are usually the days you do the least. You enter a trade, it goes your way, you exit at your target. No drama, no stress, no story to tell. But those feel empty. Your brain doesn't register them as wins because there was no struggle. So you start creating struggle to feel like you're really trading. Bad idea. Truth 3. You'll watch other traders make more money than you with worse strategies. Someone will YOLO into a meme coin and turn 10,000 into a million. Someone will hold through a catastrophic drawdown and get lucky. Someone will break every rule and profit anyway. This will make you question everything. Why am I following rules when degeneracy works? Because you're seeing their highlight reel. You're not seeing the 99 people who did the same thing and blew up. Survivorship bias is real, and it's expensive if you chase it. Truth 4. The market owes you nothing. You did the work. You learned the strategy. You followed the rules, and you still lost money. That's not injustice. That's probability. Any single trade can go either way. Your edge only appears over hundreds of trades. If you can't handle short-term randomness, you'll never reach long-term edge. So where does this leave you? You've got two options. Option 1. Keep doing what you're doing and keep getting what you're getting. The definition of insanity, right? You know the mistakes, you know the pattern, and you know that knowledge alone won't fix it. Option 2. Accept that you can't trust yourself and build systems that don't require trust. Automate your stops, trade smaller, journal honestly, take mandatory breaks, remove the audience, separate analysis from execution, measure process over profit, embrace boredom. This isn't sexy advice. There's no secret indicator, no magical mindset shift, no 3 easy steps to trading mastery. It's just boring, systematic, mechanical consistency. But here's what happens when you actually do this. Week 1, you'll hate it. It feels restrictive. You'll want to break your rules. Don't. Week 3, you'll notice you're not blowing up as often. The losses are smaller, more controlled. Week 6, you'll realize you're not thinking about trading every waking moment. It's become routine. That's progress. Week 12, you'll look at your journal and see patterns you never noticed before. Your edge isn't in the market. It's in knowing yourself. Month 6, trading is boring, profitable but boring. You're following the same setups, making the same decisions. It's become mechanical. This is success. Year 1, you've stopped making the same mistakes because you've removed the opportunity to make them. You're not more disciplined. You're just better systematized. That's the answer to why you keep making the same mistakes. It's not because you're broken. It's because you're trying to use discipline to solve a design problem. Stop trying to be better. Build better systems. Stop trying to control your emotions. Remove emotions from the equation. Stop trying to be a hero. Be boring. The market doesn't pay heroes. It pays robots. So stop being human in your trading. Be mechanical. Be systematic. Be boring. That's the only edge that lasts.